The global alternative investment space has had a strong focus on emerging markets in the past few years, with billions being pumped into these markets yearly. Sub-Saharan Africa continues to be an attractive destination for alternative investment, with 698 million being pumped into the region in the form of private equity alone last year. Joining us now from Cape Town to discuss private equity in Sub-Saharan Africa is Soula Proxenos. She's the managing partner at Private Equity Real Estate Investment Housing Solutions International. Thank you so much for joining us here on Beyond Markets. Take us through what the outlook is in Sub-Saharan Africa and what the key drivers are of the growth for alternative investment.
Well, it's a great pleasure to be here. Thank you very much for having me on your show. I'm very excited about the prospects for Sub-Saharan Africa. If we reel back just one moment, private equity is really important in the region because our public markets, particularly outside of South Africa, are so thin. And so capital that's coming into the region is very often coming through non-publicly listed companies and through private equity, which very often is a great startup way of getting funded for companies, and therefore very, very good in terms of employment creation. I think the prospects are really good. If you take a look at the IMF's report, most recently, 10 of the 20 fastest growing GDP countries are out of the region, out of Sub-Saharan Africa. So I think the prospects are really very encouraging. Now, if one takes South Africa as the largest economy on the continent, there has been quite a slow uptake in private sector investment. A lot of people in government arguing that the private sector has effectively been on what some people would call an investment strike. The private sector, of course, raising concerns about the public sector's ability to manage large-scale projects. Is that the kind of issues that you see investors raising in Sub-Saharan Africa, or is the picture completely different? I think that's very compatible with the picture that we're seeing. In the international housing solutions business, we focus in on residential real estate at the low and moderate income levels. So what in South Africa is referred to as the gap market or the FSC market. And we certainly rely on there being infrastructure capacity to be around the projects that we are involved in order for us to be able to do these projects. And we do them at scale. The first fund that we have just closed in terms of investment closure, we've done 27,000 units of housing. The fund was just a little under 2 billion rand. And so we are seeing very substantial international investors in our first fund. Over 75% of the investment came from North America. And certainly we've seen investors questioning the outlook for South Africa with downgrades from the credit agencies that we most recently experienced, and really saying, what is the future and why is there so much noise in the system and so many discussions happening that are not indicating a investor-friendly approach. Yeah. Now, I have to say, I think that we're past that. From an internal perspective, we've still got some repair work to do on the external side. I think that what we've seen with the ANC leadership meetings are very positive. I'm very, very encouraged by the National Development Plan. I think that was a very open and good process that has produced a very clear blueprint going forward. Now we have to get on with it and sell it collectively as a country and recognize that we really do have quite a lot of work to do in terms of repairing our brand. Mm-hmm.
Now, of course, the whole question of the real estate, sector is quite interesting. If one takes housing, for example, as one component thereof, we've seen some of the mistakes made in big, large economies, around the whole question around sub-prime letting and so on. Are there dangers of that kind of risk coming into the business in our part of the world? And if so, what are the kind of safety nets that can be built in so that we don't have the kind of mistakes, repeated here?
I think that in 2006-07, when the Credit Act was introduced in South Africa, it was really extremely insightful of Treasury to do that and to insist on that. And that really does make sure that lending is done at a very responsible level. We're still seeing a lot of unsecured lending happening and a lot of people getting very indebted in the country. But certainly from a mortgage perspective, I think that with the regulation that's in place and with the bank's approach to that regulation, we run no risk of falling in the same pothole that North America fell in with the subprime lending. I'm sure we'll find another pothole to fall in, but I think that one is one that we have really taken very good care to avoid.
Mm-hmm. If one looks at private equity, particularly in the real estate, take us through what the key drivers are. Why are investors excited about coming into sub-Saharan Africa? What are the kind of interesting pull factors to, to Africa?
I think that primarily you're seeing an enormous growth of middle-class households. This is true of any emerging economy where you've got a growth of people urbanizing into cities, and also you've got a growing economy. So you're seeing this in economies like Brazil, China, and the like. And so we're seeing this in South Africa. We, of course, were particularly disadvantaged by having people kept out of the urban areas by apartheid regulation, and so it's exacerbated urbanization over a very much shorter period of time. So you've got this enormous mismatch between supply of housing, of affordable housing, and the demand for such housing in the country. And that's really the dynamic that we're trying to bridge. In the market segment that we target, which is from the 60th to the 90th percentile of household income in South Africa, ironically called the missing middle, where it's actually not anywhere near the middle, we estimate, and government figures corroborate this, about a 600,000 unit shortage, which grows at about 100,000 units net of production every year. Mm-hmm. So it really is both a very good news story about a growing economy, a growing middle class, and urbanization.
But if one takes into consideration, mechanisms to drive this middle class growth, one of the big problems that we have, or gripes that we have, let's say from teachers, which often find themselves in South African context at the lower end of the middle class spectrum, they get an average of about 900 Rand as a housing subsidy, making it extremely difficult for them to be able to enter this market in a way, in a meaningful way. From a private equity point of view, how should government be approaching that sector, and assist so that one can talk about real estate investment and actually kind of get your bands up, so to speak, and drive, people's mobility within a broader band?
I think there are many different ways that government can interact, and frankly does, in many positive ways, and there are also ways in which sometimes the execution is not ideal. But one of the ways that one can do this is by not thinking just about the housing subsidy, but the overall package that somebody is earning. And the rule of thumb is that a family should not be spending more than a third of their gross household income on housing. So making available land that is well located, that has got good infrastructure, is connected to things like public transport, good water and electricity, which is one of the very big issues that we have as we map out new developments, or even infill developments in some case, is the availability of the infrastructure around the housing, and that very often will significantly increase the price of housing.